everybody, and welcome back to the Dash Trader Newsroom. The market is bifurcated as we get here into earnings season, at least for the last few days, or at least the last few days, we've had quite a run to the upside. Traders and investors are potentially taking profits on some of this massive move up on the AI tech rally. Are they moving into value as we see this market get a little bit bifurcated today? My name is Michael DeJoy, and I'm joined here by Jill Malandrino, Global Markets Reporter from NASDAQ. Jill, how are you?
Hey, doing well. Good to see you, Mike.
Great. Well, let's jump right in and talk a little bit about EV car sales. But, specifically, we had Tesla earnings, which came out, which were not terrible. Yet the stock was down. Obviously, slimming margins and, the Cybertruck concerns were the primary reason. Jill, but what's going on in the EV car sector? Do you have any insights into that?
Yeah, it's interesting. We've been covering this quite extensively on the show, and I was just on Yahoo myself this morning talking about the market more holistically. So part of the conversation are the EV mandates that the EPA announced in this April, where new emissions requirements aimed at having 67% of cars sold in the US with zero tailpipe emissions by 2032. That is significantly more aggressive than what the Biden administration said it wanted 50% to meet their mark by 2030. I think the challenge is it's one thing to want an outcome, it's something else to mandate it. And here are some of the challenges that are associated with that. We have an incomplete charging infrastructure in the US. What happens if you run out of fuel on the road? No one can bring you a spare battery pack. There's also cost, availability, supply chain risk of raw materials. I would say raw materials is probably one of the bigger variables. But there is opportunity, and there are ways to make mass adoption a reality. So there are some good things going on. But for some context, 51% of electric vehicles, it's all in the powertrain. Half the cost comes from there. So it's the battery, motors, associated electronics. By contrast, combustion engines, roughly about 20% of the total vehicle cost. But there's innovations being made in battery chemistry that's leading to EV cost declines. It's allowing EV makers to reduce the price of their vehicles. Volkswagen CEO anticipates it will be price parity by 2025. It's a year and a half away, right? Bloomberg NEF predicts that EVs will be cheaper than gasoline vehicles in about 5 years, even without subsidies. Further adoption really will take place when you're able to achieve reducing range anxiety and building out the charging infrastructure. That really is what the key is. EVs, they promise about 200 or so miles of range. The average American travels about 40 miles. So really, it comes down to sourcing the raw materials. We need high-speed charging networks to assure EV owners that they'll be able to charge their vehicles on road trips, and will also allow EV makers to not have to make bigger batteries to increase range, which won't increase the cost. So there's a number of factors here at work. Like I said, raw material supply chain and charging infrastructure are probably the two biggest variables. But it sounds as if progress is being made. And from an investment perspective, the public companies that touch these different spaces, but there is a lot that we've been covering that's going on in the private sector, the government sector, how they're partnering to make this a reality. There's a number of startups who are participating in battery infrastructure. So if cost continues to decline and infrastructure continues to be built out, that this could be a reality.
Wow. That's that's a big to get to that by 2030 is that's a big change. But if it's possible, that's amazing because what I've recently passed by was I recently passed by the mall here in Long Island, and I just saw about like 6 people sitting in like the furthest spot in the parking lot charging their EV cars.
Yeah,
So
well, it's
it's
interesting
like
because
it's
for retailers in particular, right? So it takes about, from my understanding, let's call it 15, 20, 25 minutes to get a full charge. So when they have these charging stations in front of gas stations, in front of 7-Elevens, what do people do? They walk into the store, they buy stuff, candy, sodas,
ah
whatever, while they're waiting. That's where gas stations and retailers like that make the margin. They don't make it on pumping, gas.
yeah
That's where they make the money. Um, it's almost like when you go to a restaurant, they make money at the bar, right? Same kind of premise. So it makes sense for retailers to have that. I know where I live. I live in Morris County, New Jersey. I mean, you would think that EVs were commonplace, like that that mandate has been reached. But anecdotally, having spoken to Uber drivers, really not having the infrastructure and having to time out where they're going to be. It's not like, gas stations are all over, but finding that charging is really what the challenge is for them. Um,
Yeah.
but yeah, once cost comes down, and the whole thing is, if they can't reduce the cost and people can't afford to buy them, they're going to keep their older combustion engine cars, which means EVs will sit on lots if they can't move them because people are keeping their cars longer. So there are some things to suggest that scale and affordability could be reality.
It's funny you should mention that that's where gas stations make their money. But I just recently was, in my wanderings around New York City, saw that Cornelius Vanderbilt didn't charge anything for his steamships. It was that he used to sell things on the steamships, but that was how he beat the Fulton steamship company out, was because he it was free. Everybody went to the Vanderbilt steamships because they were free, and they made all their money by selling other things while on the steamship. So there's always, that's the beauty of capitalism, is that you leave it to people and they become innovative and they find a way to make it worthwhile and make sense. Again, it's different to mandate it, but if you give people an opportunity to figure out a way, they usually do. Which they figure out a way that you would have never thought of. So it's certainly in the realm of possibility. So now, a lot of times we talk about Netflix as the key to the tech sector. Certainly, it's one of the key media stocks. Now, Netflix, again, they had some, really weren't, their results weren't bad. But Wall Street was clearly looking for something different. And we have a chart up here of Netflix, and a lot of times we use different stocks as kind of benchmarks for other sectors, or the sector that they're a part of. So it looks like Wall Street was looking for more clarity on revenue growth from Netflix. So, okay, what sector would you say? Internet, entertainment? What is Netflix technically, in your opinion? What sector does it fall into? And do you look at Netflix as one of the key earnings indicators for a potential earnings trend?
So I would say media, right? And when you look at that sector more holistically, and of course we have the writer strike going on now too, so they're thinking about
Yes,
content
that's,
and what their models
and
are going to
Iger
look
said
like.
something crazy like, I don't know, sell media or something, which everybody been going crazy about with Disney. But go ahead.
Yeah, so I mean, you have so many different. It almost reminds me of the cable companies back in the early 2000s when they were all, bidding for spectrum, and then we had all these different kinds of a la carte packages, and it just got, consumers are now going to pick and choose what types of packages they want. Then you have to think about the writer's strike. How is the industry going to be compensated? What do streaming platform and content models look like? So I would say this is even, as longer term investors, earnings is the trade. Thinking about the fundamental valuations and the models going forward, and in media, whether you're looking at the movie theaters, you're looking at the streaming services, um, the models just significantly changed, right? So
Yeah.
I think that is what analysts are trying to figure out, in terms of Netflix and figuring out how they're counting subs and revenue. That's a quarter, but what their models look like and how the industry's compensated, that is the longer term thing they're trying to figure out.
Yeah, and it's funny because we've had this whole AI boom, and I was talking to somebody who's an actor. We actually just had our event at the Nasdaq, and one of the guys did some part-time acting, and he was saying that the problem is that if you're an actor and you go and you do a movie and your likeness can now be generated by AI, who owns your likeness? Like, can they use like when there's a sequel and you're the actor, they can use AI to generate you for the
Well,
sequel.
I wonder what that model's going to look like, right? Because sports teams use name, likeness, and name, image, and likeness (NIL). We know what's happening in the NCAA with that, but contracts are signed in terms of how they can use, name, image, and likeness. I would imagine, and obviously I don't have contract law experience, that they'll probably do something the
Similar,
same,
yeah.
on network, and not many people watch network anymore. Everyone watches it on streaming services.
Streaming
Think of shows
services.
like Friends, think of shows like Seinfeld. They made killings, hundreds of millions of dollars because they're syndicated. It doesn't work like that in the streaming model, and that's what they're
Yeah,
trying to hash out.
figure out.
That's
Yep.
what they're trying to figure out. I mean, I as someone who's a reporter and Obviously, there's a lot of AI components that can shift the way financial media happens. Um, you can have AI, you can, there's name, image, and likeness, but bringing that personality and the character through, it's not going to
Yeah.
replace people. Just like, when you think about, oh, is it going to replace lawyers? Is it going to replace tax attorneys? Is it going to replace teachers? It's not. It will allow you to get some of the background work out of the way and then think creative work on more complex issues, think about new products. It's always going to be the human that makes a decision at the end of the day because,
Yeah.
my personality is my personality. I'm not sure an AI model can reflect that.
And you know what? I just remember in my limited acting experience, it's the energy that you bring when you present something, and that energy is not replicatable necessarily by AI. Some your image and likeness might be replicatable, but it's your energy, which is a little bit harder to replicate.
Well, I mean,
And
even
that's
thinking about
certainly a
it,
good point.
as an actor, how many takes do you do, right? How many
Oh,
times, but we've seen in, Martin Scorsese talks about this all the time, that they don't script a lot of things out. Like those famous movies that you see, Goodfellas and the others, a lot of it has happened impromptu on set. There's a little tiny tweak to your connotation or to a
yep.
physical movement, and that makes the movie.
Yep. So that definitely is a good point, and that's something that's going to have to be worked. But I think that as of right now, it's definitely impacting the outlook and the financial outlook of the media sector, most specifically Netflix. So you look at this chart, it's quite a reversal. And again, they did just make a run up before earnings, but then that earnings reversal was quite intense. Now that brings me to the last item for us to talk about today, which is what's to come for the rest of earnings season. We just started to see a shift. Did we just start to see a shift out of tech? Or what my belief is that we're taking profit. Down here we have a chart of the Nasdaq, the QQQ, and I mean we have been up and away, no looking back for pretty much a month and a half, 2 months, almost 3 months. And then here we have the Dow, and the Dow did not even break out until the last couple of days. So profit taking would be logical after this massive AI move. What are your thoughts for the rest of earnings season? Do you think we're going to get any other earnings surprises? It does seem to me like some of the earnings don't seem to matter, but the prior move seems to matter more. Meaning, how much have they already run?
Right. So this market has maintained its momentum. It's a multiple driven market, right? So we're going to start to shift our focus. The big banks are out of the way. The big tech companies over the next 2.5 weeks. Um, their performance, as I mentioned, has been fueled by lofty expectations. The market will be eyeing not if, but to what extent AI will dominate these firms' forward-looking guidance. So generative AI might have boosted second quarter revenue, but it may very well expand the quarter's product offerings and available target markets. I know Wedbush, they believe a new tech bull market is taking shape, propelled by this AI revolution. Of course, this is a longer-term call, not a quarter call. While they predict above average Q2 earnings for the tech sector, this is a longer term call because Wedbush also sees enterprise IT budgets showing sign of improvement in the June quarter, with AI spending becoming a reality, not hype. But I think with tech, and part of this is a derivative play off of AI, cybersecurity. That is where um, security teams are allocating budget. I think
Hmm.
cybersecurity is the biggest story in tech. It's not quite as sexy as generative AI, but because companies are moving to the cloud and weighing that risk of data
Yes.
vulnerability relative to the benefits that it derives, the tech stack is ever increasing. Bad actors are super sophisticated, and they're not even doing it to blackmail for money. What they're doing is they're attacking data, because once you have data, then you can start. Okay, we're going to expose customer data. We're going to expose vendor data. So they're
Mhm.
very sophisticated in that respect in terms of what they're targeting, and data is the currency these days. So I would I'm most curious to hear how cyber is performing.
I'm the other one thing that I'm very interested to see is after this big AI rally is to see how the actual AI companies perform, like to see what their actual numbers are. And I guess we're going to see that in the next week or so, right? Like see if it is it all hype, or is it it's actually turning into reality? Are they starting to show some profitability or some revenue in the actual big tech companies that have benefited from it? For me, it's Google, it's Facebook, obviously it's Apple to a certain extent because Apple's in everything. But I mean, these even, and then specifically those kind of the AI companies that just have AI in their name, but nobody really would knows what they do in AI. I mean, they're always interesting and fun to watch. So on that note, Jill, thank you so much. Your insights, as always, are excellent. Thank you very much for being here, and have a wonderful, wonderful weekend.
All right, you too, Mike. Take care, everyone. Thank you.
We are jumping to the charts here. So this is our chart number one. I already got my QQQ up. I mean, let's look at this on the intraday chart. I mean, literally a complete reversal. Yesterday, we kind of had a flattish to down day. And then today we get the big gap down and really continuation down all day. I mean, just pressing us down as we go into the close. We are coming off the lows just a little bit. I'm going to bring up this right here so you can see just kind of what a move that this basically wiped out 1, 2, 3, 4, 5 days. Now, I believe a while back I had mentioned that we have to watch out for an island shape reversal. Island reversal. There it is. That's the island reversal. That's pretty much the gap up. We really haven't had any significant gaps that caused a gap away, but we pretty much wiped out that entire 1, 2, 3, 4, 5 days prior to today. Let's see the SPY. Not quite the same chart on the SPY. We didn't quite get there yet on the SPY. So the SPY tends to be a little bit broader of an index, but that's where the island reversal would be on the SPY. Let's see the DIA. On the DIA, we just broke out. So I'm going to just put on, this is a very different world from the NASDAQ on the DIA. On the DIA, we just broke here. That's pretty much the breakout point, right? So we had, I could say even right here would be kind of the ascending triangle breakout point right there. So that's pretty much the DIA. You got an ascending triangle, and then we've broken out for 3 days. Today is kind of a little bit of a snapback day. The names that we talked about today, which is Tesla. Tesla wiped out 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11. I mean, Tesla pretty much wiped out, this entire V pattern today. What will happen is probably you're going to get a little snapback on Tesla, but then another cascading drop to the downside. NFLX. So here is NFLX, also similar, that big extension bar, big wide range bar. This is a wide range bar reversal pattern, very bearish. Another one is, let's see what's going on Facebook. It's better actually. Still have that habit of putting in Facebook as FB. But here you got the same V pattern wiped out on Facebook. NVDA, NVIDIA finally coming off a little bit, but still holding up there. I would think that NVIDIA is going to hold up there until close to its earnings. And the people are going to wait and see how NVIDIA does with its earnings. Apple kind of a big reversal bar, but not that bad. Microsoft kind of a big rejection of the move up, but not taking out the lows of the big stick up. Let's see a GBTC. We always like to look at Bitcoin. Bitcoin getting a little bit of snapback. It made that big run up. It looks like it might be running out of steam on that. ETHE, Ethereum, similar kind of situation with Ethereum. GLD. Gold, we talked about that 2 weeks ago, that gold looked like it was putting in a higher low on the weekly. And sure enough, that's exactly what gold did. It put in a higher low on the weekly, and it's had 2 weeks up subsequently. And last but not least, we also said that we looked like oil was going to be making a move to the upside, and that's exactly what oil has been doing. Now, oil would need to pop up above the moving averages on the daily. And it's above the moving averages on the daily, but it's not above the moving averages on the weekly. So we'd have to kind of make that swing up. But we definitely have an ascending period of lows here on oil. So you could see the lows ascending. We talked about that, I think, 2 weeks ago, and that pattern is coming into fruition. Other stocks, like look at XOM. Some of these old economy stocks like XOM is now following the pattern of oil. So XOM looks good. Ford, kind of coming off a little bit. That probably has something to do with the EV news related to Tesla. GM as well. GE has just been an incredible performer at 111, having been 70, going back a few months ago. So GE, incredible performance on old GE. So look at that chart, just straight up, up and away. So definitely looking like there's let's see, J&J. See, J&J, look at this. So this is the move to value. Look at the big impulse up on J&J. So people are definitely getting defensive. Big breakout on J&J. That's Johnson and Johnson. So consumer products are certainly getting an uptick, as you've seen the money come out of technology. You do see some money going into value. Let's see, WAL. Walmart also getting a big tick up. I mean, Walmart got slammed here, at the beginning of the year with a bad earnings report, and now it's kind of going back in the opposite direction. TGT looks similar, but it happened later. Their big slamming in an earnings report it happened later. Home Depot still doing okay, but anyway, you can see that move from tech, from AI into value. Let's see, Caterpillar. Caterpillar tends to be a good. Yeah, Caterpillar's up, and it's been up. DE is another one, same kind of pattern. All right, so we finished our chart review and analysis. Stay up to date with all things DAS by signing up for our monthly newsletter and email. Simply fill out the form at the bottom of the website at dastrader.com. Subscribe to our YouTube channel, DAS Trader TV, and the DAS Newsroom. Sign up for reminders as well. Remember to follow us on all things DAS by going to our social media, LinkedIn, Twitter, Facebook, and Instagram. We just had an amazing class at the NASDAQ closing bell at the NASDAQ market site. Stay tuned for our next event. Everybody was extremely happy, and I look forward to seeing anybody who couldn't make it this time at the next event, but certainly stay tuned to all things DAS via our website and social media. Thank you very much for joining us. Trade well, everybody.